Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. Stock markets decline across the world after the US Fed signals plans to slow rate cuts in the new year. The Nifty declines over 1%. The Sensex drops below 80,000. The rupee sinks to a historic low of 85 against the US dollar. All Asian currencies weaken after a sharp rally in the greenback. Outstanding liabilities of state governments across India declining, but it's still above pre-pandemic levels as the RBI warns against loan waivers and subs like free electricity and allowances to unemployed youth and women. Also cautions against too many central government schemes which reduce the flexibility of state governments to spend. IPO frenzy continues on the Lal Street. 5 new IPOs open for subscription, aim to raise over 2,900 crore rupees among them. 15 companies have already cumulatively raised 24,950 crore rupees so far in December, a record-breaking month for IPOs. SEBI tightens rules for SME IPO, says only entities with an operating profit in at least 2 of the previous 3 years will be allowed to file for an IPO. Caps the offer for sale portion at 20% of the issue size, also bars companies from raising funds to repay loans to promoter entities. JSW Infra unveils a 30,000 crore rupee capex plan for up to FY30, plans to expand its cargo handling capacity to 400 million tons per annum. The expansion strategy includes brownfield projects at existing ports as well as greenfield developments. After Britannia, Parle Products bites the bullet as shrinkflation makes its way back into FMCG, decides to hike prices by a minimum of 5% across the board to cut grammage on entry-level packs by 5 to 10%. High drama outside Parliament as Congress and BJP MPs accuse each other of resorting to violence. 2 BJP MPs are taken to hospital and Parliament is adjourned following the tumult. Helicopters and divers scour the waters of the coast of Mumbai for survivors after 13 people were killed in a freak accident. Mumbai police registers a case against a naval speedboat after it collides with a ferry carrying over 100 people from the gateway of India to the Elephanta Caves. Well, let's head to the top story this evening. Markets across the world have seen red after the US Federal Reserve signaled fewer rate cuts going forward. Now, even as the Fed delivered a 25 basis point rate reduction on expected lines, the commentary was fairly hawkish. Responding to questions at the press conference, Fed Chair Jerome Powell said that the central bank would look for progress on US inflation and moving slower on rate cuts. A cautionary rate cut outlook from the Fed has prompted a sell-off on Wall Street. Asian markets were not spared either, and back home, the Lal Street felt the impact of the Fed jolt. Both the Sensex and the Nifty ended in the red. All sectoral indices, with the exception of the Nifty Pharma, ended the day with losses. Prashant is standing by now. Prashant, that hawkish commentary coming into the red and leaving global markets deep in the red today.
Well, we woke up with flashing red lights, right? I mean, you had the Nasdaq, which was down 4%, 10-year, 10 basis points higher, dollar index 108 past. And of course, the Fed sounding much more worried about inflation once again, as opposed to being worried about growth. 2 cuts in 25 as opposed to consensus of 3. If you believe some, it would have been 4. Now just 2. And that's the reason why we, of course, started with a big swoon. The Nifty Bank, the other indices all started sharply lower. But the first 45 minutes, 60 minutes is when you had all the action. And then things stabilized. Technically, in the near term, the Nifty held on to 23,900. The Bank Nifty held on to the 61.8% retracement of the recent rise. And these are good signs. Advanced decline was nothing alarming. 1,100 up, about 1,700 down on the NSE. So these are numbers we can live with. It was, of course, far better. Of course, remember that the Nifty already lost about 700 points in the last 3 days coming into the Fed decision. So that, of course, one must keep in mind. But in any case, it was not as bad as what pre-9 o'clock, pre-9:15 GIFT Nifty indications were. The other indices, mid-cap and small-cap indices, we ended with about 0.5%, 0.75% cut, nothing large, regular kind of down days. Sectoral losses, defense, IT, private banks were 3 areas where they were concentrated. On the Nifty large caps, Bajaj Finserv, JSW Steel, Bajaj Finance, Asian Paints were the losses. In terms of gains, Dr. Reddy's, BPCL and Cipla were the gainers. Some minor news flow here and there, but nothing very large. In the broader market, I'll start with what was down. SI Life, a big gainer, 40% yesterday listing. Today gave up gains. DOMS, LTI Mindtree, Cummins India, Vaibhav Global, ABB, Craftsman, Triveni Turbine, Jubilant Engraver, Acme Solar, Zaggle, which sold a block yesterday, was down about 5% as well. Some of them, of course, have been big winners as well. But don't get disheartened, because there were lots of big gainers as well. on a day like today with volumes. K Fintech was one of them, Chennai Petro, Ipca Laboratories, IOL Pharma, Avalon Centum. These are small EMS companies. Kernex, Blackbuck, which has basically doubled in the last 1 month. It's a recent listing, and there was a Premier Explosives, which stood very, very well on a day like today. I think it will be important, whatever we say, to track macro US markets because of what the Fed has done. One view is the Fed's changed the game and we should expect much higher interest rates. The other view is that it's temporary and things will settle down faster over the next couple of days. So we just have to track those things closely to track the trajectory here back home.
Yes, we will. Prashant, many thanks for joining us. And in fact, here's the statement that's moving markets worldwide. US Fed Chief Jerome Powell signaling fewer rate cuts in 2025. Listen in.
We've done a lot to support economic activity by cutting 100 basis points, and that's a good thing. I support the decision, and I think it was the right decision to make. I think from now, we are in a place where the risks really are in balance, and we need to see progress on inflation, and that's how we're thinking about it. So it is kind of a new thing. We moved pretty quickly to get to here, and I think going forward, obviously, we're going to be moving slower, which is consistent with the SEP.
Well, that's the Fed chief there, but let's head back home. The rupee breaching the 85 to the dollar mark for the very first time. This after the dollar index strengthened following that hawkish outlook from the Fed. Indian bond prices also fell, and so did other Asian currencies. Latha is here now with the details. Latha, 85 gone on the rupee. What are the signals that the market's picking up on?
Rupee should have crossed the 85 mark even earlier, considering the amount of selling that's happened in the equity market and the dollars that have been taken out of the country. But the Reserve Bank was resisting it. It normally doesn't resist when it is a global trend. And that's what happened with the Fed sounding more hawkish than what the market expected. Market was expecting that the number of cuts will go down from 4 to 2. But they were not expecting the Fed to say that. They were expecting the Fed to say 3 for 2025. But the Fed, almost coming in line with the market, has kind of shocked, and you saw the dollar index go to 108 plus, and that led to about 15 to 80 basis point depreciation in all currencies. And the rupee was still the outperformer with about 15, 16 basis point cut. It crossed the 85 mark and there was some stability around that 85.07 mark. It appears that most of the long dollar positions got squared off at that point, and further demand for dollars were not there. Also, the fact that probably the trade deficit in November may not be as ugly as was earlier presented because of a possible double counting of gold was also something that worked a little bit in favor of the rupee and against too much of dollar buying. But the trend for the future, for the next quarter, for the next year, quite clearly is still downhill for the dollar. The expectation is that you must see the dollar go at least to 85.50 by the time the fiscal year ends. By then, one will know what are exactly the Trump tariffs. And for the end of the year, 2027, the emerging number is 87, which is about a 2.5% depreciation. The argument being that China in 2018, to counter the US tariffs, had depreciated its currency by 13%. And at that time, there was nothing like 60% tariffs. So now if it is anything as bad as even 20%, you should expect the renminbi to go to 8 to the dollar. And that would mean a 2.5% depreciation at least for the rupee. So 87 is the new number that the street is looking at.
Wow, 87 is the new number that the street is watching for as far as the rupee is concerned. Now, Jhunjhunwala family-backed healthcare services provider Invention Knowledge Solutions made a strong debut on the exchanges. Its shares listed at a premium of nearly 43% to its IPO price of 1,329 rupees. The company's issue was subscribed 53 times, with qualified institutional buyers leading the subscription. And speaking of IPOs, 5 main board companies kicked off their journey to Dalal Street today. They are aiming to raise a total of over 2,900 crore rupees. DAM Capital Advisors is eyeing 840 crore rupees via complete offer for sale. Engineering and construction company Transrail Lighting is looking to raise 839 crore rupees. Their IPO is a mix of a fresh issue as well as an offer for sale. The other 3 companies are wastewater treatment solutions provider Concord Enviro Systems, Gujarat-based Mamta Machinery, and Mumbai-based Sanathan Textiles. So that's the IPO pipeline over the week. JSW Infrastructure has announced a 30,000 crore rupee capital expenditure plan for FY25 to FY30. The investment aims to increase JSW Infra's cargo handling capacity to 400 million tons annually by FY30. The expansion strategy includes brownfield projects at existing ports as well as greenfield developments. Now, after Britannia, Parle bites the bullet. Amid signs of shrinkflation in the FMCG sector, Parle has decided to hike prices by a minimum of 5% across the board. Shilpa is standing by now to take us through the details, the cookie crumbling for Parle, Shilpa, so to speak.
Yeah, well, you know, your Parle G, which is the most consumed biscuit in India, is actually set to get dearer. And it's not just biscuits. Rusks, cakes, munchies are all going to get expensive as Parle is rolling out a minimum of a 5% price hike across the board. And this is likely to go up to 10%. Now, when the next time you open your biscuit packet, you may actually find fewer biscuits. And this is a result of shrinkflation, where apart from hiking prices, grammage is also being cut in low unit and entry-level packs of Parle's products. And this is by about 5 to 10%. In fact, your 5 rupee Parle G biscuit could become as small as what a 2 rupee pack used to be earlier. And this comes close on the heel of Britannia also saying that it hiked prices in the second quarter and it will hike prices by 4 to 5% in the next 2 quarters. This will be across biscuits, rusks, cake, etc. Now, these price hikes are on the back of rising input costs. Flour, sugar, cocoa, all of these which go into making our biscuits have been getting expensive. And even their packaging costs have risen quite a bit. A larger impact has been due to the hike in import duty on palm oil as recent as September, and that has pushed up its cost overall for these companies by about 45%. Now, the rising input costs are set to eat into our household budgets overall because it's not just biscuits or snacks. Consumer companies across the board are hiking prices. So the next time you go to buy your daily, weekly or monthly essentials, be prepared to pay at least 10% more. Back to you.
All right, Shilpa, many thanks for joining us. So price hikes coming in there for your favorite biscuit. Now, India's antitrust regulator has raided offices of alcohol giant AB Inbev, in which it sells popular beer brands like Budweiser and Hoegaarden. Reports suggest that the move came amidst an investigation into allegations of price collusion with retailers in southern states. The raid took place in Hyderabad and targeted retailers in Telangana. According to the CCI, government-licensed retailers of liquor in certain areas in Telangana appear to have entered into arrangements among themselves to sell only the products of AB Inbev and exclude products of competitors like United Breweries, Carlsberg and Bira. The centre has proposed a new law to ban all unregulated lending by making it a cognizable and a non-bailable offence. Sapna standing by now to take us through what the draft bill says. Sapna.
Well, this is an important draft bill that has been brought out by the centre a few days back, and this entire proposal or this entire law, the new act, is going to roll out in consultation with the state governments. So basically, the 2 to 3 major aspects or key takeaways from the proposed law. One, the plan to ban all kinds or any type of unregulated lending. To ensure this ban, it's being said that unregulated lending is going to be a cognizable and a non-bailable offence, and basically within that this is liable to imprisonment. Basically, unregulated lenders are liable to a prison term of up to 10 odd years. So the government is making it very stringent. Their objective is very clear, and it's going to be a complete clamp down on unregulated lending, so to speak. The second aspect, of course, is also the fact that the centre is going to have an online database of all kinds of lenders who are operational within the country. So if there's any lender which is not covered under any of the 20 odd acts mentioned in the first schedule of the Constitution, ranging right from the RBI Act to the Banking Regulation Act to the Chit Funds Act or to State Money Lenders Act, if any of the lenders are not covered under that, then they have to report to this authority which will be in charge of this online database on lenders operating in the country, and that will have to be taken on board. Any lender who is not registered or not covered under any of these 20 acts is an unregulated lender, will not be allowed to do any lending business. If he does, he or she does, or the entity does, or the association does, they're liable to imprisonment. That's the second aspect. Third, of course, we'll have to wait and watch and see how this really progresses. This is basically a fallout of what the Reserve Bank of India panel had said way back in 2021. It had been looking into the practices of digital lending, and it had said a certain set of measures are required to kind of curb these kind of unregulated lending practices, including a legislation to ban this kind of unregulated lending. I think that's probably what the centre has in mind, and they're trying to go ahead with it. We'll have to wait and watch and see what the final shape looks like.
Sapna, many thanks. Now time for us to head into a break, but up next, outstanding liabilities of state governments across India declining, but still above pre-pandemic levels, says the RBI. More on that when we return. Chet has reached a settlement with a lessor called Genesis to resolve a $16 million dispute. Chet will pay Genesis $6 million. Genesis will also acquire Chet shares worth $4 million at 100 rupees a share. This is a 76% premium to the previous closing price. Chet chairman Ajay Singh said the agreement will significantly reduce the airline's liabilities. Staying with aviation, Air India has placed an order for 34 trainer aircraft for the upcoming flying training organization in Maharashtra's Amravati. The FTO, set to be South Asia's largest, is expected to start training cadet pilots by the second half of 2025, post getting all the regulatory approvals. Air India's order includes 31 single-engine aircraft from Piper Aircraft in the US and 3 twin-engine aircraft from Diamond Aircraft in Austria. And there's more from aviation. India's top 2 airlines, Indigo and Air India, say that they will increase duty and rest periods for pilots in a phased manner, but only starting from June of 2025. Madiha joins us now with the details. Madiha, this has been an issue that's been going back and forth for very long. It looked like the regulator was very serious about implementing these new rules, but then they were put on hold, they were kept in abeyance, and now it seems like it's back on the execution roadmap.
Exactly. And before I talk about the latest developments, I'll quickly give some context to our viewers. In April 2019, when aviation regulator DGCA had come up with civil aviation rules on duty and rest period, which pilot associations had challenged in the Delhi High Court. They wanted more rest period to avoid getting fatigued. So in January this year, the aviation regulator DGCA came up with revised norms and set 1st June 2024 as the implementation date. But airlines resisted, saying this will jeopardize their operations. So the DGCA put the rules on hold without any date. Then in April, the regulator asked airlines to give an indicative timeline for implementation. So early this month, Delhi High Court asked DGCA to consider the implementation date by early 2025. And then the DGCA met pilot unions and airlines this week. So here's what has transpired in the matter now. Pilots are urging that new norms be implemented by February next year. Now, CNBC-TV18 learns from sources that both Indigo and Air India have refused. They've told DGCA that they will do partial implementation by June 2025. SpiceJet is seeking implementation by March 2026. On weekly rest for pilots, which is the contentious issue, DGCA rules require 48 hours of rest. Now, Indigo is willing to increase from the current 36 hours to 40 hours. The airline told DGCA it will assess the impact on operations it has and then think about increasing the rest period further. Air India said it will increase rest period from 36 hours to 48 hours from June 2025. Indigo has agreed on 2 landings per night. Air India said it will do that in the second phase. The new rules define night from 12 a.m. to 6 a.m. Indigo is willing to implement this rule starting June 2025, but Air India said it can increase night definition to 6 a.m. in the second phase, which will be in 2026. Now, both Indigo and Air India warned that increase in rest period could lead to flight cancellations and also shortage of pilots, requiring the operators to recruit more pilots. So they have submitted that their comfortable plan to the DGCA. Whether the aviation regulator will allow them to go ahead with this is something we need to watch for.
All right, Madiha, many thanks for joining us. So that's the feedback coming in from the 2 large airlines, Indigo and Air India. It's now up to the DGCA to take a call on implementation. The other big story today, the Reserve Bank of India has released a study on the budgets of state governments. The central bank has said that liabilities of state governments are declining but remain above pre-pandemic levels. The RBI has also cautioned state governments against loan waivers and schemes to provide free electricity, free transport and allowances to unemployed youth and women. The central bank argues that such spending could crowd out resources available to build critical infrastructure. It's also warned about the weak health of state-owned power distribution companies. This has been perennially a problem. The RBI has also had a word of caution for the union government. The central bank has said too many centrally sponsored schemes reduce the flexibility of state governments to spend and dilutes the spirit of cooperative federalism. That is an important report there from the Reserve Bank. High drama ensued at the Parliament's main door today as the India bloc MPs came face-to-face with BJP lawmakers. What followed was a war of words amidst loud sloganeering. Both BJP and the opposition have traded charges accusing each other of disrespecting Bhimrao Ambedkar, the chairman of the committees that drafted the constitution after India's independence. The opposition has also accused Home Minister Amit Shah of making controversial remarks against Ambedkar. The situation became more tense as more MPs started pushing each other. BJP claims that two of their MPs, Pratap Chandra Sarangi and Mukesh Rajput, sustained serious injuries after Congress leader Rahul Gandhi allegedly pushed them. Rahul Gandhi strongly defended himself, saying a group of BJP MPs were blocking the entry into Parliament and shoving him. However, the BJP will file an FIR against him over alleged physical assault. Well, that is the latest there from Parliament. But with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We're back in a moment with more.